All right, so analyzing charts and analyzing the order book, the buy and sell orders. All right, we can start from the futures page. You can click on this one here that looks like two bars. Let me show you again. Two bars. Click on it. It brings you to the chart that shows the trend that that particular coin has followed over the past. All right, over time. Now, the highest you can do is look at several months. So you click on 1 month. When you click on 1 month, that's 1M. Each bar represents 1 month. So Dogecoin has been in futures on Binance page for the last 6 months. 1, 2, 3, 4, 5, 6, 7, 8, 8 months. All right. And from what you can see here, this last bar, the red bar, is the current month, February, which started yesterday. All right. So last month, January, Dogecoin went from about 2,400, rose to about 88,700 within a month. All right. So it multiplied astronomically, multiplied almost 40 times within 1 month. That was in January. That's one of the things you can see readily on the 1 month chart, with each month as one bar. All right. Now, interestingly, on this chart, you can see the current month is in red, and the line above where the price is right now is thin. The line above where the price is in the previous month too is a thin line, whereas below it it's a thick line. Now, this thin line indicates there's resistance. That means that if the price is going to rise again above where it is now, it's going to face some resistance. All right, quite a bit of resistance. All right, the more time the price spent in a particular range, the thicker the line will be, because there isn't so much resistance, so it can play around in that range. But it can only enter into a particular range briefly and come back down because there's a lot of resistance in that area. All right, so that's not its comfort zone. All right, but this place, this thick line, more or less is its comfort zone. Now, chances are, all right, you strictly going by this graph and nothing else, chances are that Doge is going to fall in this new month that we've just entered into. It's already showing a bad sign. All right, we call these candlesticks. All right, it's already showing a bad sign. The two thin lines on top are a bad sign. That means there's resistance up there, tendencies for it to come back down. And of course, generally in crypto, things go up and down and up and down. If it went up last month this much, tendency is it's going to come down a little bit this month, a little or a lot, to correct. There's something called correction. It's going to take some time to correct itself, balance. Even if it's going to rise again, it's going to come down first. All right, so those are the things you can easily see on this graph. And of course, but beyond all that, you can see that the first month it's fairly little, second month it's fairly little, third month it's fairly little, fourth month it's fairly little. It just started rising in the last 3 months gradually, and then January it went sky high. All right, a lot of people made a lot of money. A lot of people also lost a lot of money. I made small there. All right, now that's on the 1 month chart. On the 1 day chart, which is one of the very best to use, you can see that a lot of the rise in price that we saw for January actually happened in just the last few days. 1, 2, 3, 4, 5. All right, in the last 5 days, it went from about 7,235 down there to about 88,700 within 48 hours, or within 72 hours rather. All right, multiplied over 10 times within 72 hours. That's what happened. And then it started dropping over the last 3 days, from here to here to here to here. That you can see on the 1 day chart, and it still looks like it's going to keep dropping because there's resistance up there. The thick portions, the comfort zone, those thick portions are what they are reducing, they are going downwards. So here, 2 days ago it was in its comfort zone in this range, but yesterday this range, instead of being in its comfort zone, became a resistance zone. So chances are that it's going to keep dropping, but then never say never in crypto. but that's what this graph looks like. Now, a 4-hour graph can tell you, or a 4-hour chart can tell you a different story entirely. It can tell you that Doge fell from 88,700 the day it rose. It started falling, and then each of these bars is 4 hours, right? So it fell over a period of about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times 4, about 40 hours. It fell from 88,700 to 22,147. All right, it fell to about 25% of the high value it had attained. Fell to 22,147 before it started rising again. Now, even when it started rising, it rose to 47,000. It doubled and increased above that slightly, and then started dropping again, and then rose a bit. All right, started dropping again, and then it rose a little. All right, and started dropping again. And then the last one I'm going to use, okay, second to the last one I'm going to use is the 1-hour chart. It tells almost the same story as the 4-hour chart. All right, dropped from 88,007 to 22,147. Yes, you can expand and compress and expand and compress to see. You expand to see more figures. You compress to see a wider range of time. All right, but you expand to see more figures. So it dropped to 22,147, and then rose to 47,891, and then it dropped to 33,000, and then started rising again to 42. It didn't rise as high as before it dropped again to 36, rose to 43, and then dropped again to 34,400. All right, one of the things you can look at is the points to which it is rising and the points to which it is dropping. Is it attaining newer heights, or is it crashing to lower depths? That's what will determine what the trend seems to be. All right, 15 minutes tells the story of the last few hours in more detail, and then 1 minute tells you what is happening right now. All right, but that might not be what is happening generally in the market, but that's what is happening right now. If you want to make a quick buck, get in, get out, the 1 minute chart is very interesting for that. All right now I can see that, oh, okay, it's dropping quite low. If I'm going to buy, I'll buy right now. And you see, if I had bought just now, I would have made a small profit. And then I can see how far it goes before I decide to close it or continue with the trade. So those are the things you can easily see on these charts. There are some other things that you can see, but those are a bit outside my area of expertise. But one that I can quickly touch is the RSI. That's why I use the RSI, although the RSI is common sense. Right now the RSI is 10 using the 1 minute chart. Any RSI less than 30 means that the asset is oversold. All right, a lot of people have sold and it's a good time to buy. Any RSI higher than 70, all right, means it is overbought. A lot of people have bought and it's likely to come down anytime. But that is when you're looking at it in a particular time frame. Right now you're looking at it minute by minute, so it looks like it's oversold. It's low right now. The RSI is quite low. It's approaching 10. But if you look at the 1 day chart, the RSI has changed. You see the RSI here 65 on the 1 minute chart. RSI here is 12 point something. On the 1 day chart it is 65. And if you look at the story that the charts, the bars tell, you'll see that indeed over the last few days the price has gone quite high and it has not come back down to where it was before. It has not even come near enough to that place. So right now it is overbought. In a sense, it's quite high and it can come down, and actually is coming down. And of course, you can use wicks. The RSI here is 93% or 93. Let's not put a percentage because it's relative strength index. That's what the RSI is, not a percentage. Relative strength index. All right. So right now it's quite high. Right now it's quite high. If you're looking to hold Doge for the next 1 or 2 weeks, it's not a good time to buy. It's likely to fall. But if you're looking to hold it for a long time, it's a good time to buy. If you're looking to hold it for the next few minutes, the RSI is low right now, it's a good time to buy. See, those are some of the ways to use the charts. All right, we'll go to the order book next. Okay, but one more thing on the charts. You can use the chart to try to figure out how low a coin is likely to fall or how high it's likely to rise. For example, using the 1 hour chart, I know that okay, the last time it fell, the lowest it fell to in the last few days is 0.022147. All right, right now it has risen and it seems to be falling again. I can predict that okay, if it falls, it may fall near this region or it may fall near this region. To be on the safe side, if I really want to buy it at a low, I'm going to pick somewhere around here and place another at 26,569 or 0.026569. All right, I might add something to it, maybe add 1,500 or add 150, and see what happens. Sometimes you just will be able to have your order placed or fulfilled that way. And in terms of its rise too, all right, this might not be a good graph for the rise, but the 4-hour chart, let's use the 1-day chart. There's really no good graph for the rise right now, because right now it's at a low. It's when it's at a high that you're likely to be able to pick a good value at which you can put a short and say it's not likely to rise beyond this point, and so you place a short there. All right.